morning. Let's see, live. We're going to have to reload. There we go. On save. On, there we go. Okay. Default workspace. We'll go to FinViz. We're going to open up Linktree. Oh. Then I got to pull my. Let's see. I'm going to move that over there. And does it doesn't even list me live, man. See, I look at the live and it doesn't even list me as live. Maybe that's just to me. Who knows? Home. 7 watching? No, come on. That's not true. Let's see. Chart of the day. GitLab. Let's see, live. No, it still doesn't list me as live. Damn it. Your channel. There we go. Now I'm live. And I'll hit the thumbs up button. And it's crazy. Am I? YouTube.com. Let's see. YouTube Studio. Content. I don't know why I didn't see an ad. It says it's on. Okay. Oh, well. Okay. Good morning. Okay. I think it's just you and me. Okay. Okay. Boy, we're going to have quite a bounce. Look at Boeing. Just freaking look at Boeing. I got to put that in my notes. Boeing. Dude. Okay. Man, look at Boeing. Jesus. It's up at 264. That's off this chart. Just to be, I mean, this was the net last resistance at 230. And here, if you go weekly, I mean, you're oversold, overbought at 70, coming off, what, 73? But, I mean, look at that. Hold on. I gotta move this zipper around. I don't want to be banging the zipper. Banging the zipper. That's what she said. And if you look prior to pandemic, it's a $320 stock. Up to $390, almost $400. I think it hit, $450. They bring back the dividend fully. Just back to $400. I mean, just a monster of a stock. Whew. I'll open up everything else, but look. Let's see, anything else that's big? NVIDIA is back up. Palantir is back up. PanW is back up. Qualcomm is back up. Shopify back on its way to 80. SMCI still holding 300. Tesla's up. Taiwan Semi's back up. Uber's back up. I mean, just all kind of points to. Good Lord. Let me see. Do I have Nike earnings in focus? Let's see. Let's go to the paid one. There we go. And I can look at this. Life South is giving me a $25 e-card if I donate blood tomorrow. Can't do it. Life South, I'm up in the north. This is the newsletter, and let's see, how would I play Nike? Fidelity View, there's FedEx, there's Micron. If you remember, this was the newsletter this week. Top 24, this weekly chart. They're expected to lose money. As you can see below, a larger than expected loss. The way I would play this, I was thinking of buying this one until I found this little tidbit about the CEO. He sold at $80 a share just 3 days ago. It's a little bit more than putting pool in the backyard. I would stay away until there's more clarity around why he sold. To be fair, he did sell earlier this year at lower prices as well. So we now know Micron killed it. Nike. What I see, the way I would play it. I may buy this one. I mean, Nike, let's see, it was trading at 121. Yeah, 121. So let's see where it is today. Same price, 121. Hasn't moved. Let's see how I would play this. I may buy this one. I like the odds of them making more money and continuing the rebound. You'll have to make sure they hold the 200-day on the weekly, as they might provide some resistance. But in my opinion, this is a solid big cap. Yeah. I mean, just look at when you go long term. I mean, if we have a good earnings number today, I mean, they've broken through the 200. So I think today is the roll of the dice. Roll of the dice. So let's put in the Nike earnings. Where is my fix? This was all about earlier. Got asked by a listener. Some news. Okay. From the paid newsletter. I don't know. Should I say about the... Maybe I'll save the... I'll save that one for the newsletter. Yeah. We'll go with the weekly and the daily. Okay. Okay. God, there's nobody even in here. I don't think I set this thing up wrong. Okay, joined. Okay. I think I'm just early. I think that's the issue, is that I'm early. Okay. And we'll include this as a link. Okay. Morning, Ada. Morning, John. I do want to show how ugly this is. Share map. We will copy. And then we're going to paste that. And then I'll save the image. Oh, let me first paste this. And we'll put the photo in. Copy image. Boom. Done. Morning, Zephin. Morning, Daniel. I know. Well, and it's interesting, Christian. I mean, it points to retail trading's back. I mean, if that doesn't indicate it, you know, the fact that somebody found out that a 5% APR on a bond doesn't actually pay on a 6-month bond, doesn't actually pay 5%. If that didn't indicate to you that retail is back, when those types of questions started showing up, why did I only get 2.5% and I didn't get the 5% on a 6-month 5% bond? If that question alone didn't answer that retail is back, then yesterday going down with the quickest sell-off as it did is an indication that, yeah, I mean, retail's back. So get on board. Did Fubo crash? I don't even know. Let me see. Fubo. Fubo's up 3.5%. Closed at 317. It's trading at 320. I mean, it's making its way back up. If the algo got you in at 356, listen. It's an expensive stock. They're not making money. Their price to sales is 2.69. They're losing $317 million. They have less than that on the books. They might have to dilute at some point. Let's see. What's 292 million times 0.89?
The answer is 259,880,000.
Yeah. So if they lost 317, they only have 259 million on the books. Hopefully they're making a little bit of money so they don't have to dilute, but I don't think it's a horrible one. I mean, the problem that I have is the broadcasting stuff. Zevin, I'm not in Fubo, and part of the reason I'm not in Fubo is because I'm just not a customer of Fubo. But if I was somebody in the streaming, I kind of pointed out yesterday, I think Paramount, and if we look at Paramount here, let's see, Paramount's down 1.35, or WBD. I think those are the two that I would gamble on. The one that I would invest on is Netflix. I mean, Netflix to me, you look at Netflix, look at their price to sales, they are at what is that, 6.54, but they're making money. So price to sales, let's see. Let's go to Investopedia. Because I forget what price to sales. Price to sales. What is it? Formulate to calculate it. Ratio that the company to revenues is an indicator of value that financial markets have placed on each dollar of a company's sales or revenues. The price to sales shows how much investors are willing to pay per dollar of sales for a stock. So the price to sales ratio is calculated by dividing the stock price. So Netflix is more expensive than actual Fubo, but they're making money. Morning, Chris. Zephin, I would point it out this. And if I had my investing hat on, which one do you think is better, Fubo or YouTube TV? I would probably look at the two. Now, here's what I think Fubo has advantage of. And the only reason I know this is because I've done not a significant dive, but a kind of cursory look at Fubo. they have heavy sports, and heavy sports means that they have an opportunity to integrate on-screen gambling, which they could take a piece of. So my belief is that's where ESPN becomes so lucrative for Disney. And that would be my bull case for them. But hey, I'm not going to talk you out of it. I don't think it's a bad play at all. I think it's a decent play. We're not going to have too many scans. Let me go over the scans. We're not going to have many because yesterday was a down day. We may have some triple levered ETFs inverse that go up. But let's see. Energy levered ETFs. This is the big one. Yep. HIBS. FAZ, DRV, SARK, SDOW. I mean, let's look at DPST. God. See, this one, DPST is up 3% in pre-market. It's at 96. Buy DPST. Just buy DPST on this dip. I mean, just buy. I mean, it tip of the day. Buy DPST under 100. Yeah. So I'll go into Tesla a little bit on the thing. I think that, one of the things that I want to do is go into each of the grade 8 over the next 8 trading sessions. And I chose Tesla because I read I think I've made it pretty public. I want a Cybertruck. And I read this article from Reuters today. Continue without supporting us. I'll just leave that up. I read this article today. Cybertruck deliveries hostage to battery production hell. And I think this is what Elon was talking about. They talked to 9 Tesla employees anonymously. And they're talking about the new batteries that they're putting in the Cybertruck, about dry cell batteries dry coated batteries instead of wet coated batteries, and how this production of dry coating is causing a problem. And it could lead to quality issues. So I'll talk about it. I don't know that Tesla's necessarily going to go through a dip, but I do think there's some issues there that I think could. And remember, betting against Tesla, I'm not saying short Tesla, but betting against Tesla has just made you poor. So TSLQ, I would never short that one. TSLQ I've held in the past. I also got out of it pretty damn quick. I didn't want to be in that one. That's where I lost sleep. I lost sleep on TQQQ when it got up there. I think TQQQ under 50. I think you just buy it under 50, and you wait until later this week when it's over 50. So let's see, tip of the day. Tips of the day. There's 2 tips of the day. Not owned. Let's see if anything not owned gonna. Ooh, GBTC. Oh boy. Yeah, anything under $1 is like incredibly good, but I don't throw it out of contention just because it's over 1. They could just be more effective, but it's kind of like valuation, price to earnings. Overvalued stuff, you don't want to throw it out just because it's over. You know, some people like Dan Nathanson, those guys on Guy Adami's, what's that podcast? Ring the Bell or something. There is nothing that has crossed up. Wow. Interesting. Let's go back to strategy tester. On the tape, that's it. On the tape. I mean, those guys scream about valuation. Here's the interesting thing I do know about Dan Nathanson. Dan Nathanson, he is the guy who hates Tesla. He hates Elon Musk. He hates Trump. Starts screaming about it. People had to tell him to calm down about it during the Trump years and get off it because he was just being a douche. And listen, I'm not a fan of Trump by any means, but you don't go on a financial channel and bash the guy. You're just asking for quote unquote enemy. It makes no sense. But he bashes Elon and he bashes Tesla so much. And he loves to bring up that when he shorts Tesla. And when he shorts Tesla and loses, he never says he gets out. I mean, he talks his book and says, yeah, I've shorted Tesla a week ago and I'm in on this one. Well, the other thing is, rather than buying it, he hates Tesla so much, he bought a Ford Mustang EV and had to return it. And doesn't talk about this, but had to return it because it was a dud. So, yeah, Denny Moses is awesome. Josh Brown has his podcast with one of the other guy. I think Danny Moses is a regular on his podcast. I think they co-host it. But guys like that is what I like. Josh Brown's one of my favorites. Guy Adami is just phenomenal. I think the guy is smarter than he lets on. When he gets on and says, hey, I think the stock's pulling back. I think it'll pull back here, and then I think you buy it. I mean, he says that almost daily about one stock on the closing bell stuff, and he's just really, really good. We lost confirmation in the afternoon. That's a 1.74% in the Qs. 1.74%. And you just lost confirmation in the afternoon. But you're going to gain it back because you're up at 407. So you gained it back. That's what I'm saying. I think you just buy, look at this. That's why I think, TQQQ right now is at $50.09. Shit. I'll buy 2 shares of it in Webull. You know what? I want to buy DPST. No, TQQQ. Two. Okay. I'm putting my money where my mouth is. I bought TQQQ. Put it in for $49.99. So we'll see if it hits. Okay, let's we're going to go backwards. That's a Weeble link. We're going to go here. What's this one? Yeah, douche. Douche of the day. We're going to open up that one. We're going to open up this one. We're going to open up that one. And we'll move this one over here. Great Amazon analysis. Great article there. Biden admin looking at we're going to look at this. Move that there. And then we're going to take this and move that there. Okay. Wah, 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 wah. Let me see if there's anything that's interesting here. Crude oil is down 1.63. Natural gas 1.51. No real insider stuff. Stock futures hold on to gains. Major news. Boeing has major news. Maybe that's why it's up 2%. That's why. There we go. Okay. I got Boeing in here. Okay. Bum, bum, bum. We got daily stock pick. Yeah, that's the douche of the day. Okay. And I think we got everything. Okay. I'm going to start the podcast now. It's 8:50. Probably go into the opening anyway. I noticed my recordings. Morning, Scott. My recordings are kind of shitty on this laptop, and I don't know why. I have to figure out OBS again. OBS settings. I'm gonna go into OBS settings and try and do some on here. Hit since Logan hasn't logged on. My girlfriend Logan, since he hasn't logged on, hit the thumbs up button. Make sure you're subscribed. Let's see. Sorry. I'm texting my my friends. About Tesla. My buddy just got a Mach-E as a loaner. Ironically, I was just bashing the Mach-E. And he said he has a Ford Raptor, and I guess it's in the shop. And so the Ford dealer gave him a Mach-E as a loaner. And now he is, I wouldn't say a Tesla hater, but he's definitely not a Tesla lover. And what's interesting about that is he just bashed the Mach-E, saying, God, no way this is competing with the Tesla. He goes, It's the bottom level trim level, so he said it's just crap. Okay. Let's take this out. Remove all annotations. Oh, I guess I completed that sale. Let's see. I guess I own TQQQ now. Yes, I do. 99.88. $49.94. There we go. Yeah, Scott Dan Nathanson. I mentioned it. You might be a little bit behind, but part of the reason I listen to Tom Lee and part of the reason I listen to On the Tape is it's always good to have. Ooh, is UVixy going up? Let's see. I think UVixy shot up yesterday. Yeah, I mean, that's a 7.5. Let me see. I've got to put that in. Let's see. UVixy. Okay. Yeah, SVixy is still the play. Man, I can't see my. Yeah, it's down 1.2%. UVixy is. Okay, let's shrink this down a little bit again. Yeah. Yeah, I mean, it got confirmation yesterday, but the RSI shot up so much, and I just don't see the VIX spiking too much. Pre-market, man, I'm gonna be looking good with Nvidia, SMCI, PanW, Qualcomm. Roblox is up 44. SMCI is up 2%. Buy the dip. Okay, let me look at my notes. Let's look at a monthly. A monthly of UVixy. Not of UVixy. Look at that monthly of. Let's go back to a monthly of Tesla. Look at that. I mean, you had one leg here at 19. Then you have a leg here at 250. Oh, you're talking about, yeah, SPY and stuff. Scott, that was a great episode, by the way. That was a fantastic episode, I thought. I remember that one specifically because Tom Lee, I was like, I'm listening to Tom Lee, man. This guy called freaking July. He called a Fed meeting result in a market. I think 3 or 4 times this year. He called, literally. It's hard to understand how good Tom Lee has been. Now, mind you, up or down, you got a 50-50 chance. but it's how good Tom Lee has been specifically about, I think we could see 10% in the market if the Fed does this. And boom, the Fed does it, and we see a 10% spike in the market. So he's fairly specific. He's not just out there pointing at stuff. And, you know, like a lot of folks. You know, like Charlie from Zip Trader, he's pretty good with some of his analysis. Like when he said Merrill was getting to 20. I reiterated that one. I thought it was too. He made a pretty good case, and I said, I'm solidly behind him. And now it's at 22. It's trading in pre-market at 23.50. It's up 6.33%. So buy the dip. Should have probably just bought Mara instead of TQQQ. But even on look at the weekly on this one. Let's look at PayPal. And I want to here's the thing, and Zephyr brings up a good point as you talk about the high flyers and stuff. Remember, there's some pretty good, this has not been a high flyer. PayPal has just solidly made a move back. Let's see. We're going to move this over. It's made a pretty solid move back, and you could have a golden cross here, like I pointed out. If we look, from the algorithm, November 1st, and you're at, 49 days, 25%? That's just in the algorithm. Yeah. Yeah, the Christian, I always point that out is, if we are in a bubble, that's crazy. Hey, there's VRO. VRO, you degenerate. We know on vacation. SMFL. There's no way I'm bringing this one up, dude. How are you up 20%? Today? I mean, look at that MACD down there. Whew. Yeah, Christian. I mean, listen, if you consistently take money out and put money in and take money out and put money in, it's not a horrible strategy, but the majority of your money should just stay in the market. And it may not stay in the same investments, but you should just stay in the market. SMFL. I guarantee you this one's going back. Let's look at the short interest in this. Short interest is 7%. They're losing $20 million. They don't even have a market cap of $1 million. They don't even have a market cap of $1 million. They don't even have 1 million shares floated. Good luck in fulfilling that sale. Smart for life. PR, you're funny, man. I missed you. I hope everything's well. Okay, I'm going to start doing the podcast now. Rule number 1 in how to not blow up an account: trade stocks that are actually have 1 million shares floated. Yeah, I know. VRO, I don't even, your investment account might be more interesting than your actual day trading account. I give you credit, man, though. You're funny. Okay, let me start recording. It's 9:00 now. Good morning. It's Thursday, December 21st. And did everybody like the roller coaster yesterday? We were up. I mean, just for instance, I'll give you a foreshadowing of the episode. I'm going to go into Tesla stock analysis. I am looking to buy a Cybertruck, so I did a little bit of digging yesterday, saw some articles, liked it, but I'll do a little bit of charting on the stock, kind of where I think it's going, where I think you should get into, where I think you should get out. Full disclosure, I do not own it. I own it in XLY, and I go over this all the time. XLY is 25%. It's about 50% between Amazon and Tesla, so I own it in there. I don't own it outright. But yesterday, the S&P and NASDAQ got rejected. They got 0.4% from all-time highs. Now, the Dow is at all-time highs, and I think it was just the S&P that got to 0.4%. Immediately went far down. Probably options related. And this article kind of points it out exactly. The 0 day to expires options, there was a large, at 2:30, there was a large put volume that got in there, took it down. It was fairly obvious that we would see continued selling. It is just an indication of how trigger happy selling is going to be when you start to see turnarounds in this. When you start to see turnarounds, the craziness is going to happen quickly at all-time highs, and you see this with stocks when they pull back. We're looking at TQQ right now, and I have 2 tips for the day, and one of my tips for the day is buy TQQQ under 50. I bought it at $49.99. We're trading at $48.48 right now. I think at some point in time today, you get over 50. Buy it for a day trade. Sell it over 50. Use some lunch money. Use $100. You know where you can use lunch money? In Webull. And that's my other tip for today is fund a Webull account. Do not do sports betting. If you like sports betting, you will like stock trading. So get a Webull account. Get some free stocks. Go to the link tree. The link tree is linktr.ee/daily-stock-pick. And you can get this third link right here. Get Webull. I just bought 2 shares. I love the Webull app. I like the notifications. In fact, it notified me yesterday that TQQQ's monthly, bi-monthly, quarterly, I think it's quarterly, ex-dividend date was yesterday. So if I had held into this rally, this rally has been crazy. If you bought down here at 33, back at the end of November like I did, I sold out. So I am not in on this 53%. I took about a 40% gain. I am not regretting it. I'm just regretting that I didn't get back in at this $45 amount, because at that $45 amount, up where you're at right now, you have a nice 10% rally. But I just bought at $49.99. My plan is to sell over 50 if it gets over 50 today. That's one of my tips. But I will go into Tesla stock analysis, and I will go into Nike earnings later. Just know, if you're interested in why it rebounded, I say buy the dip. I'll spoil the entire episode for you. Buy the dip. Here's yesterday's heat map from from Finviz. You can see there's like 3. Google 1.13%. CVS, Cigna was up. Everything else down. And the bright red is Tesla. Bright red is Schwab. Everything that has been up significantly went down yesterday. And it just started to, again, if you're thinking about like a tricky, trigger happy person, yeah, there's so many indicators pointing down to overbought conditions. Any small piece of negative news will trigger a sharp correction. In other words, that might be a good time to take some profits. The VIX, if we go over the Seeking Alpha, and we look at the VIX didn't spike too much. I mean, VIXy was up something like 7% yesterday in the afternoon candle. But here you look at one day, and you can see the spike at 9 a.m., 7 a.m. This is, let's look at 5-day. This is just today, I guess. But it's shot down when the pre-market opened. The VIX shot down. It's at 13. So as of right now, it's at 0.95. So it's not crazy. It's not crazy to think about. This is just a reaction to being overbought, and then something comes out. It kind of points out nobody's comfortable buying now. I mean, if you're comfortable buying at all-time highs, you haven't been in the market very long. And you don't understand what losses can be like. These things can take a quick turn. Doesn't mean you don't get in. You find quality setups. Just when you're at all-time highs, quality setups are harder to find. So that the equal weight index, all of the, by the way, everything that I was pointing out yesterday, it all changed when I woke up this morning. When I went to bed last night, I was thinking, oh, we might have more of a correction tomorrow. Everything's getting rebounded right now, which points to, again, a very strong bullish market. So equal weight index yesterday went from its 52-week low to 52-week high in 33 days. That's the fastest time since 1982. I wrote yesterday before I went to bed, I think this pullback is a buying opportunity. So take a look at that. We'll go into some news articles, but I did get asked by a listener yesterday what a cross-up means. And when I mention cross-up, it's the MACD. I mention this a lot because my algorithm is based on the MACD. My suggestion is if you don't know what the MACD is, go and Google it. Go to Investopedia. Go to YouTube. Go and study the MACD. The MACD is my absolute favorite indicator. You can do yourself a huge favor by studying it because how it reacts points to where a stock is going. The MACD, it means moving average convergence divergence. It's two lines. There's a MACD line and there's a strike line. On my chart right here, you'll see down here, this is the MACD, and you'll see a blue line, which is the MACD line, and you'll see a yellow line, which is the strike line. The strike line and the MACD line, they interact together. And why you want to know this is because this will point the direction where the stock market's going. This is TQQQ. It's on the 4-hour algorithm. And the MACD differentiates based on the chart that you're in. The MACD, when it's crossing up, the stock will typically be bullish. My algorithm is based on the MACD. I can't say it enough. You'll see right here. The MACD crosses up when we have this price at 45.89. Okay? The algorithm doesn't get you out when the MACD crosses down, but when the MACD crosses down, that's a bearish signal. You can see right here on November 21st, the MACD crossed down. Doesn't mean that the stock's crashing. It just means that you've got to watch other indicators to see where we're going. This just capitulated right here. That got me nervous and I got out. I got out before this 29% gain and the algorithm got you out. But you can see the MACD was trailing. You can't time the market. The MACD isn't going to tell you when to get in and out. That's why you've got to use multiple indicators. But when I say a cross up, that's what I mean. When I say a cross down, that's what I mean. My algo works off the MACD with some moving averages. It's effective. It's simple. It provides you guidance without emotions. That's what you want in a stock trading strategy. You want something where you actually have an indication as to get in or get out without any emotions. So say you're trading Tesla stock and the MACD crosses up and you're like, God, I love Tesla stock. I'm going to get in. But the RSI is at 90, just for shits and giggles. The RSI is at 90. Might tell you, hey, this might not be a great time to get in. Say it's at all-time highs and the MACD crosses up. It may not be a great time to get in. You want to, say it's well over the 200-day and it's at all-time highs. Might not be a great time to get in. So again, when I say cross up, I usually mean the MACD. And go and study the MACD. Do yourself a favor. Can I say this again? Go and study the MACD. Again, it's my favorite indicator. I would, and if you find articles on it, send them to me. I love reading about the MACD. I love reading about different timelines on the MACD. I use the 12, 26, and 9. It's just the standard. I've tried others. There are many articles out there that change that. It's just about, which one you like. This article, U.S. wastes raising tariffs on Chinese EVs, tightens Russian oil. This article was interesting because of all the stocks. Look at this. This is related. Solar stocks, related EV stocks. take a look at these. If you're in any of these, I would take a look at this article. If you're in any of these, I would take a look at what these potential tariffs might mean, because this could weigh on those stocks. I just wanted to bring up that news article. Anthropic. Anthropic plans to raise $750 million in a round led by Menlo Partners. You can see Anthropic got some investment from Google. It's got some investment from Microsoft, from Amazon. My point on this one is not, hey, you want to get into Anthropic, you want to do this, blah, blah, blah. Anthropic was co-founded by siblings and former executives at Microsoft, backed OpenAI, Dario and Danielle Amodi. I don't know how you say it. But these guys just basically built Anthropic. It's a large language model. It is the hot stock of the hot company of the day. And they're getting $750 million in a funding round. Okay. And the two leaders are Google and Amazon. Remember what happened with Microsoft when they started pumping OpenAI with some $10 billion. They didn't even fund them with $10 billion. It's mostly just computing power that they're doing. So this is an interesting one because I do think that this provides some catalyst for both Apple, Alphabet, and Amazon. Apple is said to be talking to them, but nothing so far. This is a great, speaking of Amazon, I read this article. This is a long article. I think you need Seeking Alpha Premium to read this one. If you're in Seeking Alpha Premium, click on this one. If you're not, you can go over to here and get a $50 coupon off Seeking Alpha Premium. I think it's $189 for the year. I find it extremely helpful. A couple of things, I got a great letter from one of my listeners, Chris, last night. Fantastic tip. I mean, just super generous too. But he wrote about how Seeking Alpha, he switched from MarketWatch to Seeking Alpha, and how much better Seeking Alpha is than MarketWatch, how he's finding the quant system, which is how they rate stocks. They find you different stocks that are top in their quant. It's a quantitative analysis. It's kind of like an algorithm. It beats Motley Fool. Motley Fool can say, hey, we've got all these stocks, and they hang their hat on Netflix and Amazon. Those are the two stocks that they hang their stuff on. But Seeking Alpha Premium, I think it's absolutely worth the $189. If you had two tools to get, I would wait for sales. The $50 off coupon is a great coupon. It's ongoing, but it's $189. From what I know of Seeking Alpha, they don't do too many deals. So I don't know when they're coming up, but typically that link will lead you to the best dollar amount. I think right now it is $189, but you do get $50 off right there. I think it's the best. The two tools. So Seeking Alpha is one, and that's your fundamental tool. That gives you everything that you need as far as analysis of a stock. It gives you everything as far as, do the analysts think it's a buy, hold, blah, blah, blah. Here's my portfolio so I can see my portfolio easily. This is the Daily Stock Pick Core portfolio. I have not inputted my Fidelity portfolio just because this is a affiliate deal. So I don't use it personally. I use it more for the podcast, but it's a great tool. And I can see, okay, which ones are going well, which ones are going poorly, which ones are sells, which ones are buys. So you import your portfolio. This is the first tool. The second tool I would get is TrendSpider. And TrendSpider is, constantly, they have sales. Let's see what the sale is right now, because yesterday's sale, I think, may have been extended. I don't know if it's been extended. Let's see the pricing. It is, yeah. It's extended for another 15 hours, $397. My belief is, and I don't know when they're doing these sales, so understand that I don't get any pre-warning about sales, but $397 is probably the best price. The only other better price that we had throughout the year was a $250 offer, which saved you, what, $250? That's $150. Come on. If you're trading in lot sizes of 1,000, if you're trading in lot sizes of 5,000, of 10,000, $150, you're just missing out. But the two tools I would get are Seeking Alpha and TrendSpider. And Seeking Alpha has this great analysis. This is just a phenomenal analysis. Super long, super in depth. But if you're going to put a large amount of money, You better know exactly what that stock does, how they make money, and where they're making money, where they're growing, things of that sort. So if you have Amazon, you have Seeking Alpha, click on the link in the newsletter or down below, and it'll provide you a great analysis of Amazon. I liked it. So let's go into the Tesla stuff, because Tesla, you guys know, I'm planning on buying a Cybertruck. I bought a Model 3 that was built under the tent in Fremont during the 2008 hell, where Elon was sleeping in the factory many nights. And they almost went bankrupt, and he tried to get a meeting with Tim Cook and couldn't. And they were going to sell to Apple because he needed money. And then all of a sudden, the Model 3 became the best-selling sedan. Then the Model Y becomes the best-selling crossover, blah, blah, blah. You guys know the history of this one. The stock has gone. I bought the Model 3 and built in a tent. It has been phenomenal. I have not had too many problems with it at all. I think the dirty sock smell and the air filter has been the main one that I've had. I've had some bushings that have been needed to be replaced. Nothing crazy. But there is this article, and this is what I found about the Cybertruck. And they're trying this new production of dry coating technology of the batteries. And this may be what Elon Musk referred to as hell, production hell. Is more the battery than it is the actual Cybertruck. Understand, the Cybertruck is stainless steel. It is a new production style. They are the first ones to do this. But this particular article goes into pretty in-depth about the dry coating technology that they're doing versus all the other batteries for EVs have been wet coated, and how Tesla's having problems doing this, and it could lead to some quality issues down the line. And so it makes me want to just hold off on buying the Cybertruck, to be honest with you. It also makes me kind of pause with Tesla stock. We are in a run right now. You're at the algorithm got you in it here at 251. Back here on December 15th, you're up about 3-4%. Nothing crazy, nothing horrible, but nothing crazy. If you got in at the end of October, at under 200, where I was saying, hey, it's a great buy under 200. If you get under 200 on this one, this is a great one. Let me remove that text. If you got in on this one at 201 and you're still in it, because I don't think you should have gotten out, you're up, 25%? Nice 25% move. You're trading in pre-market at 251, up 1.8%. It's at 247. My particular preference, if you're looking to buy this, would be to buy this probably at under 250. 247 is not a horrible price. Here's what you have to know about Tesla. It is overvalued, and we'll go into the fundamentals once we're done with the chart. But you've got the MACD. I just went into the details of the MACD. You got the MACD crossing up. So if you're looking at a short-term trade, it's probably a little bullish. You've got the RSI in no man's land of 53. Remember, this is 0 to 100. The lower means that it's oversold, which means that buyers should start showing up. The top means that it's overbought, which means that people will start selling. So this is a weekly chart. I don't think there's anything that this tells me. The 50-day is moving a little bit up in this, where it looks like there could have been a little bounce off, maybe even a golden cross here. But since the end of June, you're just kind of putting in a capitulation here between probably 270 and 200. You're right in the, you're on the upper portion of this. So if you buy here, just realize you might have some bumpy room ahead. As far as the weekly goes, you can clearly see this is 2023. These are the bottom in January, where we've seen that great run up here. It was pretty clear down here that this was going to be, down below the 200-day. I thought maybe you might see somewhere in the neighborhood of 150, and we got down there. We got even below this. I thought this one, if I just put this right here, I thought that right there, around 230 was going to provide, 200 was going to provide some pretty good support. That right there at 200, pretty good support. I think 200 is where you really want to load up on this one. Now, let's go over and let's look at FinViz. Everybody has FinViz. It's free to use. You can see the PE is 79. The forward PE is 64. It's got a $785 billion market cap. It's in the S&P 500. It's part of the Magnificent the Grade 8, Magnificent 7, whatever you want to do. Cash on hand, they've got plenty of cash on hand. They don't need to raise, so they won't dilute you. It's got a 3.27% short interest. There have been significant short sellers that have gotten out of this. Year to date, it's up 100. The target price is 239. The most recent stuff, November, HSBC Securities said, hey, reduce it. They put their price down to 148. In September, Deutsche Bank and UBS both rated this with about 290 to 285. I do think that 300 is probably going to be a top. Understand, this is a retail favorite. So as far as a retail favorite goes, what you'll see is if we could just go to the, let's go to the 4 hour and let's see if we can see some, retail favorite, you're going to see this bottom stuff and you're going to see volume. And when you start to see, like here back in May, you can see it go up. See how this volume trend starts going up? When you start to see this volume trend go down a little bit, then you want to start to buy in when it trends up, because retail traders just tend to load into this name. It's at 251 right now. Again, I think anything under 250 on this one would be good. If we go over to Seeking Alpha and we look at Tesla, let's look at Tesla from a Seeking Alpha, from a Wall Street standpoint, from a everything kind of, everybody that looks at this thing. Seeking Alpha analysts say hold. Wall Street says hold. Quant says hold. The valuation's an F. The growth is a B. The profitability is an A. What part of the issue that you see in this one is the margins. And auto margins are just, I think Ford has like a 3 or 4% margin. GM has an even less, like a 2% margin. Tesla was running at about a 25% margin. They started cutting costs, cutting prices of their vehicles. And he's done this to basically undercut most of the other automakers. So understand the battery is the most expensive portion of an EV. And Elon has pricing power because they have gotten their battery prices down. As these other automakers start to make their cars, their battery costs are significantly higher. So they are actually selling their EVs at losses. And Elon does this on purpose. He says, hey, if we're going to go to an EV future and the other automakers are going to be forced to do EVs by this administration, I'm going to cut prices so that they have to sell theirs at losses. So what you're seeing is GM and Ford are now cutting their EVs going forward, EV production, and they say it's based on demand. I think there's some pretty big manipulation going on there. Tesla doesn't have dealerships. Ford and GM both are under the dealership model. So Ford sells their cars to dealers, and dealers then sell the cars to the customers, and dealers actually service. They make the large majority of their money off of service. EVs don't need a lot of service. So I think dealers are probably falsely, and you've seen this throughout the time, dealers falsely tell people how bad EVs are to own, blah, blah, blah. You have to charge them. You have to do this. You have to do that. I mean, it's not that big of a deal. Honestly, I think I'd rather not have to go for oil changes. I'd rather not have to bring my car in for regular maintenance. I would rather charge my car at home on a daily basis versus going to a gas station. There's a lot of benefits to having an EV. Just like there's a lot of, on a road trip, you do have to spend a little bit more time. I think on my road trip from Atlanta to New Jersey, I think it adds a total of 2.5 hours. 2.5 hours additional, but every I got dogs in the back. So stopping every 2.5 hours, 2.5 to 3 hours, I'm fine with that. It's not a big problem. I'm not a guy who, hey, I've got to get from point A to point B in as quick as time as possible. I'd take autopilot. And full self-driving is another thing, blah, blah, blah. But again, Tesla, as far as the stock price, I think 250 is a fair price. I don't think it's a great price. I think 200 to 220 is a great price for this stock, even with that valuation. But again, if you go over to Seeking Alpha, they're telling you not to buy it. Do I think you're going to see 300 in this one in the next few months? No. I think this one is finding a home between 200 and 250, and it's going to sit there until some type of next catalyst. Whether that catalyst is some type of increase in the margins
the price of actual auto loans going down and an increase in demand, whether it's the $25,000 low-cost EV that Elon says they are close to launching, it's going to take some type of catalyst, and a fairly big catalyst. Now, on the other side, the downside of this one, I just had two friends email me, ask me, hey, what's Tesla stock like? Because I really want to get out of this because of Elon's political crap on Twitter. Elon doesn't do himself any favor by doing what he does on Twitter. He doesn't care. He told advertisers, F you. I'm not going to say it because I'll get demonetized. But he said F you. And that's going to continue. If you don't like Elon, don't buy the stock. And I tell people I'm not going to defend Elon. I'm not a huge Elon fan. The guy is not somebody I would want to be friends with just based on people that have said things. There was a John Oliver episode all about Elon and why we should be scared of Elon. And they, again, I'll point this out, and I pointed this out again. When they recalled 2 million cars, the recall was a software update. Toyota just recalled over, I think, 2 million cars. Theirs is a physical recall. It's a different thing. We have to come up with a new term for a recall for a Tesla, because at no time has my car been called in for a recall of some type of mechanical part. It's all been software. Every recall that I've had has been software. So Tesla stock, I think at 250, I think you're hitting you could get up to 270. But I think the tops in this stock, until we have a catalyst, and again, I hate to say this, but the valuation in my mind, with the margins the way that they are coming down, I think the stock needs a catalyst in order to get up. Either margins, either new product, either new demand, something that takes its place. Because I think Elon is doing himself no favor by actually going on Twitter and doing what he's doing. So there's my in-depth Tesla analysis. Now on to Nike. I wrote in the newsletter about Nike this weekend. And if we go down here, this is the paid newsletter. So know that if you pay, it's $80 a year. I'm going to up it to $100 probably this month at some point in time. I'm not going to give you a warning. So if you want to sign up, it's $8 a month or $80 a year. Here's the earnings for Nike. I said, this is the one I'm most excited about. What I see, I went into depth about earnings per share. I posted a couple of charts, how I would play this. I said, personally, I might buy this one. I like the odds of them making more and continuing the rebound. You'll have to make sure it holds the 200-day on the weekly. So let's take a look at a daily of Nike on the 4-hour algorithm. The 4-hour algorithm had you in at 95 here. And I was saying under 100, this is just a crazy good stock to hold if you want to buy long term. Well, we've seen this one rise 28% in just 80 days. It is overbought right now, and the RSI is high. It's at 67. You can see the MACD is crossing down right before earnings. Is that a automatic get out? No. We saw with there was a FedEx. FedEx, when they ran up into earnings, and they had even the littlest of, hey, guidance might come down, they gapped way down. And you can see that run there. This gap may be enough to support FedEx right here. And I said, hey, buy anything under 250, I think in FedEx is fine. The MACD was extended and turned down. It's very similar to Nike. So you have to be careful, because this move in the stock means that any bad news, they can pull the trigger quickly and sell at a significant profit and buy back later. This is why people don't like to play earnings, is because it's so hard. Now, here's the thing. In November 2021, this was a $170 stock. It is expensive. Understand, this is expensive. The valuation, the PE is 37. The forward PE is 27. So they're expected to go to 27 if they have some increase. The stock price is going to rise, because that PE will need to stay at 27 and the PE will stay at 37. The target price is 124. You're trading at 121. The 52-week high is 131. That's you're 7% away from that. Performance year to date, it's only up 3.78%. So it hasn't participated in this run. Not at all. They've had some inventory issues. They've had some other stuff. If it were me, and I said this in the newsletter, if it were me, how I'd play this, make sure it holds the 200-day on the weekly, as this might provide some resistance. But in my opinion, this is a solid big cap earning stock, and I would continue to their longer-term higher trend. I included a monthly chart with a channel, which I would keep in there for the paid newsletter customers to see. But on the monthly, it looks really good. Again, on this weekly, we'll take out this one so we can see it a little bit. Remove all annotations. We'll remove that one, but you can see it's right at the 200-day, right here at 122. It's trading at 123. It's up 1.3% in pre-market. It didn't fall off yesterday afternoon, or I'm sorry, let's look at the 4-hour. I think it might have fallen off yesterday in the afternoon. Let's see the afternoon candle yesterday. Let's pull this down. Oh, come on, grab onto it. There we go. The afternoon candle yesterday, we are open. Afternoon candle, 1.52%. So you opened at 123, you closed at 121. Right now you're trading at 123. It's just gained back what it lost yesterday. So I would continue to think that this one has confirmation, continues its climb up. If it were me and I were looking at Nike, remember, I wear Under Armour and I wear Puma. I got the dad bod to prove it, but I wear ASICs. So I'm not a huge Nike fan of the clothing. The clothing for me just isn't. It's not great. But the company is great. The company is really well. Let's look at some stuff. CRISPR yesterday, CRSP. Their lead researcher actually left. Crazy how it happens after a cross up. This is just another overreaction in my opinion. You can see yesterday afternoon, we saw it down 4.52%, and then you're seeing it up a little bit today, up 1.96%. Any reaction in the market is an overreaction. From a weekly standpoint, this is just one that's kind of hanging out under its 200-day. CRISPR, it is in the Geo form. If you want Geo, any bio DNA stuff, I'd buy ARKG. Honestly, that's one and one. ANF. This is Abercrombie and Finch. This has been a crazy stock this year. A absolutely crazy stock. It has you in at 62. You're trading at 92. This one just since the end of October, you're seeing a 48% gain in this stock. It has been one of the best years for this stock. It is continuing its trend. They raised their guidance again yesterday. So it's the return of the teenage Chad. So I reiterate today, Paramount and WBD are in discussions to merge. I think it is great to get into those. I am in Netflix, and I am big in Netflix, so I'm not getting in those because I'd rather bet on Netflix personally. Micron went up on earnings. This one immediately was down. It was interesting. They immediately went down. And this was one that I put in the newsletter as well. I had noticed that there was some insider trading from Micron from the CEO. Big insider trade. I mean, we're talking more than a pool in the backyard. You can see here's the CEO and president. I mean, 250 million, somewhere in that neighborhood or something. But it went up. It is up 6% at 83. And they lost money. Their loss was tighter than expected. I had said, hey, if you want long term, I think it's a good one because I think you still got 20% till you're double top there. So that's one that I put in the paid newsletter. Again, if you want the paid newsletter, you can do that. Bank of America named top 2024 pick in the banking sector by Evercore. This is up 1.3%. In the 4-hour, you're just on a historic run. I said, buy this under 30, sell it over 30. I don't think that you're in any danger of selling this one. Like, this one's not coming under 30 anytime soon, but you are hitting up against that 200-day on the weekly. So understand you are seeing some resistance. If we see a pullback, then this one might be one of the first ones to come back down into the under the 30s. Boeing, have you seen Boeing? This is interesting. Boeing, they're bullish on the contract to sell 777s to China. This one, just a historic banger. I mean, God, just since this at 178, you're up in a Dow stock 50%. in 55 days. I mean, just Boeing, part of the core portfolio. And it doesn't mean that it's done, because if we go back here and we look at the weekly, you're seeing it broke through that resistance that I said right there. But if you go back to pre-pandemic, this was a $400 stock. So if they initiate the dividend again, if they start turning things around like they are, you're going back to 400. And it's just a fact of life in this economy. I think you're going back there. Costco, we talked about it yesterday. I saw this yesterday from Savvy Trader. This is the history of Costco's dividends. So you can see how good that $15 dividend is. Costco, again, their dividend, I think it's the 27th, or is it the, let's see when the ex-dividend date is. It is the 27th. So we saw a pullback. Again, I think if you're looking to get into this one, you're seeing that button hook. I think the algorithm might get you out. The algorithm over 2 years makes you 34%. Buying and holding this over 2 years makes you 21%. So the algorithm works. It's looking like a button hook. You do have a couple of gaps down there that might be taken, but Costco dividend, solid dividend. You can see just from this Instagram post there. NASDAQ 100 top stocks: Amazon, Zscaler, Adobe, Melly, Tesla, AMD, PanW, CrowdStrike, Meta, and NVIDIA. You can see how good NVIDIA has done over this year. But if you own any of these, I own 1, 2, 3, 4, 5, 6. Well, I don't own Tesla, but six of the 10. 6 of the 10. So I own 6 of the 10. 6 of the 10 are in the core portfolio. I own them solid way. Douche of the day. This is a senator. Is it a senator? Let's see. United States Steel CEO. No, it's the United States Steel CEO. Douche of the day. This dude. We'll look at this one. Let's look. The CEO sold 252,000 shares on the day their deal was announced. Remember, this was a $30 stock that jumped up to $50. And this dude, the CEO, sold 252,000. Now, it was pre-planned. Is that insider trading? I don't know. Douche of the day. I'm thinking douche of the day. Remember, they have a deal from Nippon, the Japanese steel maker, to buy them at 55. This one has pulled back to 48. We talk about gap fills all the time. You got a couple of gaps in this one. You got gaps down here, 22 to 27. That was when Cleveland Cliffs made their offer for $27 a share. You've got this gap here between 39 and 50, which is when Nippon made their deal to $55 a share. This one is in decline. I would look to this one to probably get down to about 45. I might take a look at this one at 45 because, again, even if the deal doesn't go through, somebody's going to have to make a bid for this one. So I like that one, but douche of the day, the CEO. Let's talk about social requests. Game Breaker, what do you think of ConAgra, CAG? ConAgra, a food supplier. We can look at what they do. Let's look at the stock first. Ironically, algorithm has you out with a 3% gain. You can see that MACD is crossing down, and it's crossing down hard. Something happened to this one. I don't know exactly what, but let's go over and look at some of the core. It's packaged foods, $13 billion market cap, S&P 500. Short interest, there's not a huge short interest, 2.21%. Average target price is $30.20. It's trading at $28. 52-week high is 41. PE is 12. Not crazy. Nothing nuts. December 12th initiated coverage with a $31 price target. December 11th downgraded Evercore, outperformed to inline. Again, with that $31 price target, they're trading at 28, so it doesn't have huge upside. ConAgra, when we look at a long term of this one, you're just seeing it. I mean, I would expect it to come back to this 200-day at 35, but you've got that death cross. And with the 4-hour getting you out, I just think you may see some more downside on this one. I don't know the details of the actual story on this. If we go over to Seeking Alpha and we look at ConAgra, let me put this in so we can see some of the analysis of it and whether it's a buy or a hold or something like that. because Seeking Alpha Premium, again, it's really good. You can see the most recent is a hold. That's from Monday, November 20th, so it's a while ago. Seeking Alpha analysts say it's a buy. It's a hold in the quant. It's a hold in Wall Street. 1 year, it's down 26%. I mean, nothing about this gets me excited other than the dip. And I don't know enough to say that dip is unwarranted. That dip might completely be warranted. I mean, look at how much it lost its confirmation just from May till October. And it's not like it gained it all back. It gained 1 bar above that 9-day and then seems to have pulled it right back. So I'd be a little bit careful of it. Not that I don't like it, but it is what it is. Dex from Spotify asked me about PayPal. I own PayPal. I own PayPal in a couple of lots. And you can see this is from the newsletter. I can say, hey, PayPal might have a golden cross, and it's continued up there. Again, this was from a previous newsletter that I put these in. Still have confirmation, and we just passed the 200-day. Once you pass that 200-day on this 4-hour, you seem to use the 200-day as resistance. That's the next resistance line. So as it pulls back, I would expect it to pull back to about 60 here. But you have that golden cross, and that golden cross is a catalyst to push it forward. Now, when you look at a weekly on this one, we are nowhere near the 200-day, and the 50-day is still turning negative. You've just gained confirmation over that 9-day. Your RSI is in no man's land at 50. So do I think it's coming back? I think it might, but what you have to know is PayPal is not cheap. PayPal's PE is 18. The forward PE is 11. The price to sales is 2.3. They are making money, so you don't have to worry about that. It's down 13% year to date. Its average target price is 73. You're trading at 61. You can see the most recent Bank of America Security went from buy to neutral. They brought their price target from 77 down to 66. You're trading at 61. There are a ton of gaps in this one. And I've said this before. If we go to the 4-hour and we run this one, I think we covered the first gap. We covered this gap down here, and this goes to about 60. We covered that gap. I think you're going to this gap at 72. That's where I'm holding. Now, I've got several positions in this. Some of them are actually higher than 72 because I've held on to this. If you go to a monthly on this one, I'll kind of show you. I believe I bought somewhere in here in the 140 to 150 range. It might even be 190. But I bought this. It continued to go up and then just sold off. And I didn't get out. My mistake. But if you look at this one, this is why it's been so basically highlighted as a beaten up stock that needs to come back. Well, they've got a new CEO. There's some changes being made. I particularly like it. I'm in it. You can trade it if you want. Matilda from Instagram. Hey, Gary, could you please review Vanguard VBR ETF tomorrow? Sure, Matilda. Let's look at VBR. VBR is the small cap ETF. If you know about small caps, these are the ones that everybody's screaming have been oversold and need to rebound. This is the IWM. This is just the Vanguard version of IWM, I believe. But it's the small cap value in particular. Now, value means that they are typically just a value kind of stock, and they need to rebound. If we go over to Seeking Alpha and we look at VBR, we can look at the holdings of this one. Again, Seeking Alpha I like to look at them for this particular holdings and things. You can see it's trading at 178. It's up 0.4. We can look at Builders First Source, Bungie Global, Booz Allen. Nothing that I personally would invest in. But remember, I'm a large cap tech guy. And you can see the largest holdings are 0.63. If we look at the summary of this one and we go down, Vanguard Small Cap Value Index Exchange Traded Fund launched and managed by Vanguard. The fundamentals in the stock of companies operating across diversified sectors that invest in value stocks of small cap companies. It seeks to track the performance of CRSPUS Small Cap Value Index by using full replication technique. Again, that's just it's a low cost ETF that's following CRSP. That's all this is saying. So, but I mean, it's okay if we go. Let's go to charting. let's take a look at this one. We'll look at this and we'll look at, let's select metrics and go performance, total price return, update chart. And then we'll look at select symbols. We'll do IWM and we'll do QQQ because I think, we'll put in SPY as well. Let's put in SPY because I want to show you kind of how it's underperformed. So here's IWM. You can see 1 year IWM's up 15%, VBR up 15%. It's kind of a toss. QQQ's up 50%. SPY is up 24%. Year to date, you can see VBR and IWM kind of the same, right along the same line. Nothing crazy there. QQQ is up 53% and SPY is up 24%. If you go back down to 5-day, you can see VBR is down 0.16, IWM is down 0.39, QQQ is up 0.49, and SPY is up 0.2. 1 month is where you're going to start to see that VBR and IWM are up, and QQQ and SPY are down significantly less. When you go to 6 month, VBR is up 11%, IWM is up 6%. QQQ is up 10% and SPY is up 7%. So you can see that, long term, I think VBR and IWM trade very similarly, not right along line, but short term, it is a difference. I would not trade any Vanguard ETF. They're talking about small cap and mid caps leading the way next year because they have underperformed. You saw that in the long portfolio, in the long charting when I did that. I would take a look at the contents of VBR in particular if you're interested in this particular sector, and take a look at what these companies are. Vanguard isn't going to lead you down the path of kind of hey, we're going to show you one thing and just perform another. Its expenses, super low. 0.07. I mean, it's got, any Vanguard stuff is just going to be super, super cheap. You can see the rating, Seeking Alpha analysts say buy, Quant says buy. So it's just, Matilda, honest to God, it's just not something I'm super excited about. So Hawes from Spotify wrote back, sorry I wasn't clear. I had a 4% increase in RILY. So he was talking about B. Riley. I don't know why it's, he put in Riley, but it's RILY and it's B. Riley. I have a good story about B. Riley. B. Riley almost bought Earthlink. It was public, so it wasn't anything that I'm hiding. I don't have any insider information, but I will tell you the day before the actual sale was completed, the B. Riley CEO went to the Windstream CEO and said, we're not happy with the price that we offered for this. We want to cut it by 20%. And kudos to the Windstream CEO, Tony, who said F you, and called the deal off. And honestly, that probably extended my employment at Earthlink a little bit longer because we were bought by private equity. But B. Riley wanted to basically come in, just shutter the business, blah, blah, blah. B. Riley and Hawes says, I had a 4% increase in Riley, then it dropped back down to 20-30 quickly. Anything under 20 is a good buy entry. Dividend is good for a long one. I'm not a fan of dividends. You guys know that. I'd rather be a fan of growth than dividends. Dividends, I think, just provide you cash to spend somewhere else. And so if you need cash or you need some money, I think dividends are a good one. Seeking Alpha analyst, strong buy at 4.5. Wall Street doesn't cover it. Quant doesn't cover it. But we'll go over here and we'll look at RILY. Let's look at the chart. Algorithm has you out. 13% gain. Nice 13% gain there. Has you out here at 2078. Doesn't have you back in. If we look at the MACD a little bit, it looks like it's just kind of capitulating under that oscillator. The RSI is at 45, kind of in no man's land. If you look at a long term of this one, I don't know that you want to stay in this one. RLY, let's see. What's the consensus? $847 million market cap. It's got an 18% dividend. That's an enormous dividend. That right there would get me out. Honest to God, what B. Riley is telling me is that we're just going to return shareholder profits. and we're just going to basically gut our business. And that's exactly what they were going to do with Earthlink, to be honest with you. They were going to cut the entire staff, cut all costs, cut all service, just basically run it as a profit center. And that's what they do. And so what they do is, in order to give shareholders back money, they give it back. It actually loses its money, its value in the stock price. So I'd be very, very careful. If you're trading this one, great. I wouldn't hold on to it for that dividend, because I think that dividend, if we go over here to Seeking Alpha and we go to its dividend, they usually do a really good. They don't actually have dividend safety. They don't even rate it and stuff. But the dividend yield going forward is 19.4%. Annual payout is $4. And you're on a $20 stock. So, again, their last ex-dividend date was 11/17. Payout date was 11/30. So they looks like they pay it quarterly. I don't know. Again, if you want this one, great. Have at it. I don't like it. It's just one of those things. So there you have it. Let's go over scans. HIBs. Now, just be fully aware that a lot of these bear got a cross up yesterday because the turn was violent. You don't have confirmation in this one. This one's down 5% today. HIBs is one. FAZ, this is the financial triple levered ETF on the bear side. Understand, it's got no confirmation. Probably getting you out. You're down 2% here. DRV, this is the real estate sector, bear. This is not something that you want to get into. They just crossed up in the algorithm. They gave you buys, and the reason was because yesterday was so violent. SARK, this is one that, again, a bear ETF that goes back. It's the short. It's got no confirmation. It's down 1.66% today. SDOW, same thing. This is the short, the Dow. Just because the move was violent, it got you in, but it doesn't mean that you're going to get into this because you don't have confirmation. You're down 1.98%. So those are the short ones. The only other one that came to a cross up, and it's an addition to the to the current run, is GBTC. So this is the only other one that I found that has a cross up, and it is up 0.92% today. And you are up 85% in 82 days. Just a great one. Again, GBTC, Mara's returning back. It's up 4.52% today. It's getting back what it lost yesterday. Crypto is on that run. I think until July 10th, crypto is going to be on the run. If you've listened this far, kudos. But my tip of the day is DPST. DPST is one, I think you can buy it under 100. Let's see if it's trading over 100. No, it's up 2% at 95. I think you can buy this under 100. And I think as regional banks continue to move, I think we've covered this gap down to almost covered this gap. If you buy this right now at 95, you may get down to 91. But I think you get over 100. At some point in time this week, I think you get over 100. It's my tip of the day. Again, that's for listening all the way through this. If you've listened this far, you love me. First off, thank you. TrendSpider, get it while it's still on sale. Again, I can't say this enough. Don't wait, because you're going to wind up paying $780, $940 for the year next year. Just get the yearly. You can get the monthly for $79. Pay $79, get a free 7-day trial. What you get when you sign up, you click this link in Linktree. You sign up using that link. Then you email me using this email link right there, and I'll send you my algorithm. I'll send you my watch list. I'll send you everything that you need to trade just like me. That is the first thing. Second thing on the Linktree is Seeking Alpha. It's got a $50 off coupon. Third thing, quit your sports betting. Bet just like I did. I bought TQQQ in the Webull app. I love that Webull app. In fact, TQQQ it is trading at $49.74. I bought it $49.99. Am I worried about it? Nah, I'm fine. So yeah, anything that you need from a support standpoint, it's all here at Linktree, linktr.ee/daily stock pick. Okay, I will talk to you guys tomorrow. See you. Bye. I think I went on for an hour. Okay, let me read your comments. Scott remembers Bob. I love Bob. I love that Bob story. That Bob story is great. I mean, that Bob story is always good to get back into. And I think in this particular one, Scott, if you're going long term, I think you're fine. I think you buy on those dips. I think you dollar cost average. You don't go all in, but I think you dollar cost average. Can I use TrendSpider on my iPhone? Yes. You can use TrendSpider on your phone. They do have a mobile app. It is not as good as the desktop. So I would not subscribe to TrendSpider if you don't have a desktop. And I think Sherry's one that I talked to about this before, is that if you don't have a desktop, I think you don't want to subscribe to TrendSpider. They have an app. They're trying to get it better. Weeble's app is really good on the iPhone, to be honest. Yeah, Scott, you're right. Yeah. I mean, if you invest in ETFs, you're kind of in there. I don't say you have to agree with Elon. I don't say that I have Jewish friends that drive BMWs. I mean, it is what it is in my mind. Yeah, the TrendSpider app, I know they're trying. I don't mind. My girlfriend has an iPhone Max, and it's not bad on the iPhone Max, just like it's not bad on an iPad. But on a regular size iPhone, charting's just tough. Webull, honest to God, I think Webull does it the best. And I think Webull's app is actually really good with the charts. Sign up I'm telling you, drop $500 into Webull. If you have enough. I dropped $1,000 in there at the beginning of the year. Use my link. You get free stocks. It's really good. Oh, no, it's January 20th, Scott. So I think, let me see. Let me Google this. When does the SEC respond to GBTC lawsuit? This is all October. I want to say, let me look at the news. And let's look. I think it's January 10th, January 13th, somewhere around there. I don't want pop-ups. They have to respond by a certain date, and I think it's January. Let's see. Approval by the January date to sit around 90%. Let's see. Doesn't spot ETFs, but in. I think it's January 10th. They have to respond. Doesn't mean that they can't say, hey, we'll launch it later this year or something like that. But it looks pretty good that GBTC will be one of the first ones. Scott, I know. I'm loved. Palantir position. I like Palantir. I'm in for a couple of shares at 1760, something like that. Has you in at 1798. Look at your algorithm. Did I buy at 1850? Hold on. I bought it in my Webull account. Let's see. Palantir. Yeah, I guess I did buy at 18. I'm down 6%. 6%. So it's not horrible. Thanks, Sherry. I might get Mac Mini. That's my next purchase, Mac Mini. For home, I'm going to replace that iMac that I have with a external monitor and a Mac Mini. I may just use this, may get a docking station and use my MacBook Pro, but we'll see. Nike, and I'm telling you, I think Nike today. Nike's an interesting one. I think DPST under 100, honest to God. I think that one's let me see, indices check. I'm going to check my indices. Let's check my big account in Fidelity against the indexes. As I like to sign off each day. My iMac does not travel. In fact, even taking it to the Apple store, it's part of the reason why I want Mac Mini is because taking the iMac to a store for service is just such a freaking hassle. It's so big. And so I'll buy an external monitor. Okay, I am up 0.44, so I'm underperforming the indexes. My assumption is that's Apple. Because let's be honest, Apple runs my my entire portfolio. Apple is up 0.35, yeah. But I'm up, listen. 0.46% is, in my portfolio, what most people make a year in salary. I think it's the average. Average U.S. salary is, I think, what about 0.5% is in my portfolio. So I'm happy with, I'm happy with anything. I didn't mention that, you guys can tip me. Go to Linktree. Somebody give me a tip. I'll get off once somebody gives me a tip, I'll get off. Send me $1 in Venmo. If all 17 people in here sent me $1, I'd be $17 richer. Go to my Linktree and send me $1. I'm kidding. Do not send me $1. No. Take that $1 and go buy yourself download the McDonald's. So my greatest find, I think, about traveling in the last year has been the fast food apps. You can get a free French fry from McDonald's almost every day. I mean, honest to God, if you're just walking around in a mall and there's a McDonald's, order a big French fry and just kind of walk around with a French fry. If you're driving and you get hungry, just go into a Burger King app and get a free fry. Go to their dollar menu. They always have specials in these apps. Even Starbucks. Starbucks has free drinks in their apps sometimes. I like it. So, okay. I'm going to go put this together. I will talk to you guys tomorrow. See you guys. Take care.